Good morning, dear friends. Today is 5th of February and we start our new portion of analysis on the foreign exchange market. What we'd like to mention first of all today is the fact of the much stronger data we had at the end of last week when the United States Statistical Office published its payrolls report, and you can see that the United States economy still stays on the solider kind of footing, and the unemployment rate at the historical lows for the last 8 years of 4.1%, and then our average hourly earnings is still on the upper trend, and absolute numbers was perfect around 200,000 new jobs created in the United States economy. All of that gave a lot of confidence in the arms of the Fed's policymakers in the pursuing of a much hawkish policy. And that means that during the 2018 we could see not only just 3 hikes from their side of the Fed, but even 4 of them, and all of that should support the United States currency. But strong but. The tendency of normalization of the monetary policy from the part of other major central banks around the globe. That means that the dollar, you could see this year, it started the year on the weaker footing, and from this point of view, the dollar will have a kind of headache, despite of the much stronger United States economy, much hawkish Federal Reserve System, probably stimulative for the dollar, stimulative kind of policy from the part of United States President administration. Anyway. Regarding today's strategy, you could see on your screens we made some changes. First of all, we'd like to mention that Australian dollar, our long trade recommendation, was closed during the Asian hours because Aussie, you could see that drop it below 0.79, the low was 78.91. Anyway, we decided to reboard the currency this morning. We reboarded at 79.28 with a stop at below the lows of the night hours of 78.91. We put the stop at 78.90. We're still pursuing the long strategy here because we consider the current downtick as a kind of a false break. You could see this on your screens on the Australian dollar. Let's see that. Let's see that on the chart. Let's see the Australian dollar. It's at the moment it's trading around 79.30. We still suggest this downtick as a kind of possible false break, but the time will show, of course. That's why in our New Zealand dollar strategy long trade recommendation we also made some changes. You can see this. We decided to increase our position in case of a possible drop below 72.30 with a stop below 72. On the chart of New Zealand dollar, we prefer to see the daily one. We see that 72 is a kind of pivotal support region for the bullishness over this currency in the New Zealand. So that's why we prefer still have a kind of long position in the Kiwi while we are trading above 72. But let's see how the situation will develop during this year after the strong United States economic data, how the dollar will react to this, how the stock market will react to this. Another support reason is that during today in the morning in Australia, I will show you, for example, here, just a moment. we see that, for example, AG Services Index in Australia is better than expected. Its actual number is 54.9 comparing to the previous number of 52. Inflation gauge of the Australian economy is still better. It's 0.3% comparing to 0.1% previously. Also in New Zealand, commodity prices is better, and what's very important, the services index, purchasing managers index of Chinese economy is also published much better than expected at 54.7 comparing to expectation of 53.6. That means that the commodity block of currencies like Australia dollar or New Zealand dollar should be supported on the set of this stronger economic data. That's why we decided to reboard our position in Australian dollar, still keep our position in New Zealand dollar. The Canadian dollar is still under the upward pressure of the NAFTA negotiation process, which still is not very well conducted. And also another reason is lower commodity prices. The oil prices is lower. That means that the Canadian dollar could enter kind of consolidation phase. Anyway, we still expect the dollar Canada in its longer term downtrend, and we prefer, after we closed our short trade recommendation on Friday, we prefer to wait for the moment for 25.90 before selling again with a stop above 26.25. Why? It's also because our exposure in the commodity block of currencies, we still already have some positions in Australian dollar and New Zealand dollar. That's why we decided not to over position ourselves with such kind of currency pairs. That's all at the moment. Let's see how the things will develop further. Today we have a non-manufacturing ISM index of purchasing managers index of the United States, which is also will be very important because the services sector is it's taking a lion portion of the gross domestic product of the United States economy. That means that this component is much more relevant to describe the real state of the United States economy than the manufacturing one. And what else we'd like to mention? Let's see the economic calendar of today. Also today we have a services PMI for the British pound, which is also should pay some. We'd like to pay your attention on this, as well as services PMI for the European economies. At the end, we have a kind of ECB President Draghi speaks. He will speak on what is this? Latest release due to testify on the ECB's annual report for 2016 before the European Parliament. It will be very interesting how he will probably answer the questions, if they will, regarding the current stage of the European common currency and regarding of better European economic indicators. See you later. Have a nice week ahead. Bye bye for now.